good afternoon. Okay, so it's good to be in Chennai, and as always, I think it's been a very incisive, So if you, come here and you talk to people, they're very incisive in their questions. But still, I will try to, have some of them from you, and which is why I don't want to miss that out. Yeah, so today I'm talking about alpha, and I think that's something that customers are really after today, right? If anybody, if you are advisors here, if you have investors, then that's something that you're really looking at. It's sort of right at the top. And actually, I think for advisors, it's a difficult time, right? Because I'll come back and talk about a few things and, what is the right alpha, for example, right? Alpha is good, okay, but the question is it sustainable, right? So, and I thought this was a very nice, analysis that PGIM had come up with, and I thought, they bucketed it into sort of two parameters, and they gave three different scenarios for it. One is they looked at quality, okay, which they looked at it more from ROE, ones which are above average ROE were taken as better quality. The second was in terms of growth, ones which had a better revenue growth than average again were taken as ones with higher growth. And then they segmented into three places, right? To say quality and growth, quality or growth, and neither quality, neither growth, right? So what is interesting, if you look at 5 years and 10 years, quality and growth trumps everything else, right? And however, if you look at 1 year, right, the bottom one is the sort of alpha that you have, right, or the negative alpha, okay, whichever is thing. So you'll find that the quality and growth is like, crazily underperforming. Neither quality, neither growth. So my question for you is, what is the alpha that you want, right? Because in the long term, I think it's a no-brainer, right? Which will do better, okay? But if, you are in a momentum phase, if you are in a phase where I think the last phase, when junk runs up, okay, then it's something that you have to be careful about, right? So how do we look at alpha? And I'll also come back and give a few examples. And I think that's a better sort of way of going about it. So one of the key ways is start from the basics, right? You may say alpha from process, okay, but I think that's where you start, right? So how you are a disciplined investor, and for us, even I think some of us are individuals looking to also grow our wealth, investing in stocks, etc. And I'm sure some of these maybe are disciplines that you can also look at for yourself. Okay, so the whole process at Right Horizons, for example, is, we break up the full journey into these 4 steps. And so each part of the journey, right from screening to, looking at a deeper evaluation where we look at the scorecard and, we look at risk as a full separate process in itself, risk both before we invest into a stock as well as on a continuing basis, okay, and the last is obviously, looking at value, what is the right price. So pendulum looks at, have you got the price right? Is it a time to enter? Is it time to exit, etc.? So that is something that is there. So, and we also made multibagger framework as a process. Okay, so, I have a background of having worked in Wipro, and I think some process is very much ingrained in me. So we saw that, okay, a few stocks had become multi-baggers with us, and we said, okay, how do I make it repeatable? So we looked at a process for that also, right? So, and broadly, if you look at it, it comes from 2 places. One is my earnings growing? For example, if my earnings doubles in that 3 to 4 years, it's very likely that my stock price also doubles in 3 to 4 years. So how do you identify those companies which say earnings double in the 3 to 4 years? The second is, can I also find, stocks which are a little lower valued? I don't know if you'll get quality plus complete undervalued. Okay, there'll be a reason for it if it's that way. So, but something which is probably you're looking for an emerging leader, right? And as you come closer to, a leader, then you basically sort of look at, emerging leaders, and if their valuation is lower, then you try and enter into some of them. And this is a point that, a lot of us may say, you're talking about alpha, but you're talking about process, you're talking about quality. Okay, does that deliver alpha? Right? So actually in the long run, if you look at it, and data shows that especially if you look at small caps, if you're in the bottom quartile, okay, you get almost no return. Okay, so that's a very, very important thing to keep in mind. And at times like these, when let's say the mid and small caps are doing very well, okay, when we're investing in some of these portfolios, when we're recommending some of these schemes, I think how do you look for funds that also look at quality and have a very thorough process. And I thought also we'll give a bit of a case study. One of the names that we have, for example, is KEI Industries. Okay, and if you see, it's been a crazy 14.5 times. Okay, and I would still think that process was one of the most significant reasons for it, because it came in our screen. Okay, all the metrics it was able to achieve, and valuations were lower than, let's say, the leader. We felt that it was a bit of an emerging leader. So if you're able to sort of identify these early, my point is, it can definitely be very remunerative for you. And I think, like somebody said, I think the return come from the stocks, right? And if you get those stocks right, obviously the portfolio also will be right. Of course, you must also keep in mind is, can you do it with all your stocks? Obviously not, right? So all of them will not give you 14.5x. Okay, all of them will not be multi-bag, not even be multi-baggers, right? So, but I think if you have a process towards it, then that's something that you will be able to achieve. And comes through managing risk. Again, I'm saying all the things that you don't expect for alpha, right? I'm again saying managing risk, and that is something which is very important, because if you go back and look at the falls are much sharper, okay, and when it gives away, you may find, and if you go back even and see some of the fund houses, including the PMS, which have done exceptionally well in a period and extremely high momentum gains, okay, it gives away, right? So the point is, I think we've had Olympics recently, so I would say, do you want to run a 100-meter race, right? Or do you want to be there on a longer journey, right? And I think if your objective is just 100-meter race, then maybe you don't look at risk. But if it's a longer journey and you have to go through those cycles, I think risk is definitely something that you should look at. The other aspect of how to identify a multi-bagger is about identifying trends. So one is process, like I said, and risk, etc. The other is, I think, coming to the positive side of things. Okay, so actually, how do you identify trends, right? And one of the things, like I think was also said by some of the speakers earlier as well, discretionary consumption, right? So it's definitely a big trend. And in some form, even the KA that I spoke of, the example, probably is also one part of it where, it was in that trend, right? So, and the company also in the right place, it was in the trend, and sort of that gave a bit of a kicker. So one is to, when you get bottoms up, the other is if you're able to identify the trends and your companies come within that, then definitely that's something, which will also help you get alpha. I think there's a lot of government initiatives. I don't need to, spend time on this, because and I think there's a lot of stuff happening for India, China Plus One and various other things. So I think we all know the India story, so I'll not dwell on this too much. Okay, but the point is also about expensive or priceless, which is also the other thing. And another one which I said quality, I said, growth, I said process, okay, and all of it, again, if you see trend, almost like continuously doing better and better and better. And I remember some investors came back and said, maybe almost like a year back, but trend I think is over, isn't it? Run up too much, right? But if you have the engine right, okay, and you're also watching the valuations not excessive, then I think that is something that is an interesting one to keep watching out for. Investment themes, and again, that also came into the consumption theme, right? So it's again part of the journey. It's part of, I think, the way Trent was able to crack into the younger generation, the things which are moving, etc. And I thought, again, let's say here, we'll give what is our perspective of sectors which maybe are the ones to look out for, right from manufacturing, financials. I think some of us here said similar things, okay, maybe similar sectors as well. Okay, so building materials is something that we've separately set aside. Okay, somehow we've preferred building materials over real estate. Okay, so because that gives us a little more comfort. Okay, and you have capital goods, you have consumer discretionary, and renewable energy, not real estate. Okay, it's not that I'm negative about real estate, but I meant renewable, energy here is a trend. Okay, and the key risks, of course, that you also have to keep in mind, is, could there be suddenly, some geopolitical stuff happening all over the globe. I think we've seen a lot of that coming together, I think, in these last few years. Okay, if politics deteriorate and the situation there. And so, and of course, I think as we go forward, and that's, I think, the more important one, is as we go forward, as markets continue to go up, valuations will become increasingly a very, very important aspect for you to look at. Okay, so, and the other one is about, again, value, right? So you can also achieve alpha through value, right? So alpha through value, and which is why growth at a reasonable value is something that we also looked at. Okay, and if you remember, I also said in a multibagger framework where you're able to find opportunities where the PE grows and the earnings also grows and doubles, right? Then you end up finding a combination of both. Okay, it was interesting that once we brought in this framework, we almost realized that we've hit 20 multi-baggers over the last almost like 3 years. Okay, ranging from 7 months to maybe about 4 years. That is the sort of a thing that when we are looking at it. So that is something, if in your investing journey you're able to look at, or you have a manager who's sort of also looking at bottoms up, because in the end, what it also does for you is it makes it safer for you when you're sort of looking at quality, right? And takeaways, okay, like I said, alpha is important, but what is the right alpha? Do you want sustainable alpha? Okay, and you don't want it to go away in the cycle down, right? So, and a lower fall also can deliver alpha. So, like even for us, prior to COVID, in 2019, October to December, we found valuations were high. Nifty was at 29 at that point of time, and that time we didn't hear so much of overvalued stuff there that you find today at 23.5, right? So it's interesting that there's a lot of people looking at the short 100-meter runs today. What is it? It's gone up all-time high, etc. But we go back and look at it. Actually, I think we are not at the absolute low, but I don't think we are at a point where we have to be really concerned about. And ways to find alpha, I think, right from being a disciplined investing process, managing risk, identify trends, and maybe also looking at valuation. And so, can you find companies, which are growing but yet at a reasonable valuation? And obviously also captured some of the sectors, right from manufacturing, financials, building materials, capital goods, and consumer discretionary and renewables, renewable energy. Those are the areas that sort of we think will drive the future. Yeah, thank you.